Field surgeons, elite minds, what's going on? This is Diamond Life. And so I'm just coming to you guys right now talking about the sibling trade or shadow trading. Not created, I haven't seen anybody put shadows on a chart. So whatever. Don't matter who started it first or whatever. So I would just want to prove that I'm actually trading this stuff. Okay. I've seen some people in the comments. I'm actually going to put somebody ass in check. It's probably one of these retail ass traders who want to use indicators. Somebody said something in one of my videos. I'm actually gonna put the motherfucker in check soon, but he said there was no way you could predict that price could go to this area. Like nobody saw that, and I'm thinking to myself, you must not heard about a guy named ICT. But anyway, that's neither here nor there. But this is the shadow trading. So I'm about to show you how I actually got in this move here on Ethereum. I just sold right here, like you see, it says I sold all my loans. I should have held it, but let me tell you I why I held. So first off, what I did was I put the first 5 trading days, okay? Because if you understand how this works, price action is fractal, okay? So if you really about that life, you understand that on crypto, it actually happens. This whole trade setup, the first 5 trading days, it actually happens 2 days before, 2 to 3 days before it happens for forex, okay, in indices. What I'm trying to tell you is that the first 5 trading days forms in crypto 2 to 3 days before it does it in indices and in forex. Okay, so I use the same shit on here. So what I did was and this is something new that I'm doing right now as far as doing the micro standard deviations. Actually, these are micro standard deviations. So what I mean is that these are micro standard deviations. So this is one standard deviation from here to here. That's why you have one up here. And then we have the micro standard deviations of the one standard deviation. Okay, like right here we have, let me zoom in because I know when I'm recording it look kind of weird. So right here we have 25% of the one standard deviation. We have 50% of the one standard deviation. Then we have 75% right here of the one standard deviation. But what I did was I went a little further and I actually plotted the 25% of this 25% right here. So when I did that, well, this is what I found. This is why I went long on Ethereum. I caught this big move. So right here, as you can see, Ethereum hit the 25% after these are the first 5 trading days, okay? After this line right here, this is the 6th trading day, and this is the 7th trading day where we're on now. So right here, Ethereum hit the green line. And then when I looked at Bitcoin, it hit the green line as well. Let me draw the green line out. This is a micro standard deviation. So I looked at Atom, which is something else that moves similar to all 3 of these. It hit the green line as well. Okay, but I didn't trade Ethereum because it already hit the green line. So why did I get in? The reason I got in is because I saw that Atom and AD right here was taking off like crazy. Okay, that's why it's important to put the shadows on here. It's not going to be a video at all. That's why it's important to put the shadows on here. Now look at this. Atom hit this line right here on this day here at this time. Okay, so Atom hit the next line up. Okay, and then I saw that Litecoin hit this area as well. So, but Ethereum is dropping. Okay, so what made me get in for a buy is when I checked ADA, which is Cardano. Cardano shot up like crazy. Okay, Cardano shot up like crazy all the way up here. So this was a dead giveaway. I'm like, okay, well, I know that Ethereum and Bitcoin eventually have to rise. So why is price going down right now? It started to kind of not make sense. So what I had to do was I had to look to the left and I said, okay, well, what do we have on the structure? See, listen, man, what I'm trying to show you guys with the shadow trading or the sibling trade, if you don't understand the structure, then you still can make money because all you have to do is follow the patterns. But eventually you're going to have to understand how the structure works, okay? Like I was telling somebody on the phone the other day, I said, I want people that's working with me to be pissed off at making 3,000 to 5,000 a month because they know if they understood the structure, they could probably be making 20,000 a month, right? But they like, I don't understand the structure yet, so I'm only making like 2, 3, 4, 5,000 a month right now, and that's actually a dream of mine for somebody, for people that come on board to be complaining like that, you know. But the whole point is for people still to make money. I want people to still make some kind of money while they're learning how the structure works. Now let's talk about the structure. So when I saw Cardano shoot up like this, right? I was like, okay, so obviously I'm not saying that Ethereum is going all the way up here where Cardano went, okay? But the whole point is I probably can get 50% of the move, right? So the way it works is if I measure 50% of what Cardano did, I was like, okay, it probably will give me at least 50% of this move because remember, they all move similar. So I was like, okay, what kind of makes sense? This is a false run up here, this green line. So as price was dropping, I was getting mad because I got in right here. This was a mistake though. I got in right here, but this was a bullish breaker right here. Okay, this is what understanding the structure works. Okay, but understanding the pattern, you still can win, but you're just going to be in drawdown a lot longer if you don't understand the structure. So this was a bullish breaker right here on the 15-minute chart. This is the main reason I purchased right here. I thought price was just going to go up. But then it started going down. I started getting mad because I was in drawdown. I'm like, what the hell is going on here? I was like, okay, well, maybe you want to come back down to the breaker and then go back higher. And it kept dropping. So I'm like, dude, what the hell, So I looked at the structure again and I'm down to the 4-hour chart. Okay. This is where understanding the structure comes into place. Now, what I'm showing you with the sibling trade, with shadow trading, if you don't understand the structure or if you forget or whatever, then this is, just trading the patterns come in. This is where trading the patterns come in. So if you understand the structure, what I did was I was like, okay, well, why is price still dropping? Remember, I got in here and price continued to kept going down. I got mad. So what I did was I went on a higher time frame, quote unquote, higher time frame. And I said, what's the structure? So why is price coming down? It's only coming down to go back to an order block, the zone mean threshold, or maybe want to do a rejection block before it goes higher, meaning it'll take out this low. So what I did was I came down here, I marked up the zone, and I marked up, well, I forgot to mark it up here, but this is mean threshold, okay? Which is 50% of the body of the lowest down close candle, which is the order block, okay? So this would be a plus OB 4H mean threshold, okay? And the color I use for 4-hour is green, but we already have the green for this order block, so I just put white on there so I don't have two green colors. It kind of confuses me. Okay, so what I do is for mean threshold, I always make the line green, but I kind of dim it so it can kind of let me know the importance because this zone up here is green. So let's go back down to the 5-minute chart. So I got the higher time frame marked up, right? So now we back down to where I got in at, and I'm trying to figure out why am I going into drawdown. Okay. So remember, I got in because I saw which is Adam. Actually, another one is called Adam. Adam right here actually started taking off. I didn't mark it up, but it was like up here somewhere. And AD, which is Cardano, was pushing up pretty hard too. So I'm like, okay, well, they all move similar. So why is Ethereum dropping? So I had the higher time frame marked up. I had this zone marked up, but it already hit this zone. I'm like, okay, so why isn't it just taking off? I already came back down to the bullish breaker. I was like, okay, well, maybe it want to come down to this bullish breaker and go back off, but it kept dropping. I'm like, dude, what the hell? So when I got right here, I was like, okay, well, maybe it wants to come down to the opening price. I got back in on another buy right here. So to be honest with you, I just started getting mad. I just started buying as price was dropping because I know it. I'm like, it instantly, it has to reverse sometime soon. Really thought it was going to come down to this bullish order block because if you understand order block theory, no candle should close below this mean threshold if it's truly bullish. And if no candle closes below this mean threshold right here, okay, remember right here, let me pull this to the right. Remember, this is the mean threshold of the bullish order block. So I was like, okay, well, price is coming down here to this bullish order block, right? And I said, okay, well, price could come all the way down here. I'm just going to not do anything until I see a candle close below. If the candle closed below, to be honest with you, I just would have wait till price retraced up a little bit, probably to come up to here, and I just would have took a loss. And see, what you also have to understand is just because you have to understand how the structure works, because think about it. If a candle closed, if price came down here and I didn't see wicks, because if price just came down here and wicked, let me draw it out. If price came down here, let me make this white. Make this white right here. So listen, if price came down here and just wicked and the candle closed above here, it's going a lot higher, okay? But if price came down here and then it closed right here, what I'm trying to tell you is that instead of taking a loss, if you understand how the structure works, you can take a loss, but it'll be less of a loss. What do I mean by that? If price closed below the mean threshold on a on a bearish candle, it probably is going to retrace up temporarily. Okay, it may have retraced up to fill in these gaps right here, and then it's definitely going lower. That's how the structure works. So what I'm trying to tell you is that instead of taking a loss right here, you could have waited until price came up here. Remember, you still would have took a loss because you got in. Because remember, I got in here, so I still would have took a loss, but I'm taking less of a loss. Does that make sense? I'm taking less of a loss, understanding how the damn structure works. This is actually important right here. What I'm saying. Remember, I got in right here. So what I'm trying to tell you is that if I got in right here again, I was buying as price was going down. But if price closed below this mean threshold line right here, it's going to retrace up temporarily, and then it's definitely going to take that low. That's how the structure works. So what I'm trying to tell you is that if you understand risk management, you're going to take a loss because you got in at the wrong place. But what I'm trying to tell you is you can take less of a loss if you understand how the structure works. If I got in right here and price closed below mean threshold, it's going to retrace up temporarily, only to definitely go down lower and take out this low. So what I'm trying to tell you is that if you was in drawdown from right here getting in and from right here getting in on a buy, you would be in less drawdown or break even if you understand how the structure works. So it's going to close below mean threshold and then come up here and then drop lower. So just rewind the video. I don't know if that made sense, but that was extremely important. I remember I kind of got that like a year ago. I was like, damn, I can take a loss, but it could be less of a loss if I understand how the structure works. So anyway, let's go back to the deal. So I'm doing what ICT talked about, right? ICT says buy as price is going down, but you have to understand the structure. You have to understand where it's going. Now remember, Cardano right here, Cardano and Atom or Cosmos right here was pushed up like crazy. Like it was up here. Atom or Cosmos was up here, and Cardano, which is ADA, shot all the way up here. So I'm like, okay, well, it's definitely going higher. So why is it going down? I'm like, it's going down the mean threshold. Okay, and I was like, okay, well, if it comes down here, then I'm going to wait to see if it. I was expecting price to come down to mean threshold. Let's say mean threshold was here. Okay, I was literally expecting price to do something like this, wick down mean threshold only to go higher. Because what happens is if you don't see a candle close below mean threshold on the higher time frame order block, it's definitely going to take out the high. Okay, so the high was here, and the next high was up here. Okay, so it went back down. If you see something like this, don't get scared. Just wait to see if, let's say this was mean threshold, even though we know it was down here, it never made it to it, but let's just say mean threshold was here. Okay, you go down to the 5 minute chart, quote unquote 5 minute. You have to literally mark up the last down close candle directly in the middle. You have to literally zoom in and make sure it's perfect. You have to make sure that 50%, which is here, you have to make sure these red lines, this is a Fibonacci without all the settings taken off. Okay, this is just a fib retracement. I have the Fibonacci on here and I have the standard deviations on here. So just write down the coordinates and do that if that's important to you. You have to make sure it's exactly on the bodies of the daily order block or the 4 hour order block, okay? And then just mark up that 50%. And that's how you get mean threshold. So let's finish and then I'm in the video. So let me put this back down to where it needs to be because it's not mean threshold on a 4 hour chart. So I was buying as price was going down, right? Uh-oh, let me move this back. If you mess up, just go to backspace right here to automatically move the chart back to where it's at versus you trying to go back and redraw everything up. I was buying as price was going down. Then I saw price start reversing. I'm like, if it takes out this high, it's a wrap. So price took out this high. I'm like, okay, cool. And then it started reversing again. I'm like, dude, what the hell? But I understand that sometimes it will retest the bullish order block before it takes off. So I'm like, okay, well, they want to play games with me. Okay, I'm going to buy even more. Now, remember, when I was buying, this price was going down. I'm not putting on heavy leverage. I'm putting 0.10s here, 0.10s, 0.15, 0.25, 0.5, and right here I hit them in the head. I was like, you know what, fuck it. I put on 2 lots right there. And I was like, if it goes down to mean threshold and closes below, I'm going to let it retrace up, get my money back or break even, and then it's going to go lower. But I got tired of these people playing with me. You know, I put on 2 lots down here, hit their ass in the head. So right here it was stressful right here because I had on 2 lots right here. And then I I put on like 3 positions here as price was dropping, then I put on another 3, including that 2 lots. This is real stressful right here. So I'm back on the charts. I'm checking all the ones that move similar. I'm right here and I'm like, dude, what the hell? Let's see what's going on with Bitcoin. Bitcoin is looking crazy. I'm like, damn, because Ethereum and Bitcoin move similar. And so I'm looking at Atom, which moves similar to which moves similar as well. And Atom was messing around BSing as well, right? But I knew I seen this big spike right here. Remember that big spike? So that told me that Ethereum was going higher. Then I go to Litecoin, okay? I go to Litecoin, and Litecoin dropping like crazy. I'm like, damn. But I remember Litecoin had went higher as well. Okay, sorry for the background noise. Sorry for the background noise. And so let's just go back to Ethereum, and then I'm going to end the video. Okay. So I'm here. Damn. Hold on, quick. Back to my annotations. Okay, I'm about to end the video. So I'm here, and I'm like, okay, I'm just gonna. I have my plan in place. And I'm like, okay, if price goes down here to mean threshold, because remember I never made it down there. I'm like, okay, well, if it goes down here and start wicking, I may put on another position, but I was already kind of over leveraged, to be honest with you, by probably 30%. So that was kind of wrong too. But I said if a candle closes below mean threshold, it's going to retrace up, and then remember I put on a lot right here. So this is understanding how the structure works, people. You can do shadow trading, you can do sibling trading, and not understand how the structure works and still make money, because think about it. If you got in right here, even though you would have been in drawdown, you'd be like, okay, well, the other ones already hit the seat. And this is another thing. You also could have got out at this line that right here. You could have got out right here. Now remember, Ethereum already hit the green line. Like if you see my confirmations right here, it says, look at this, check this out. It says we have confirmation for 5 out of 5 here, meaning that this green line, Ethereum already hit it, Bitcoin hit it, Atom hit it, Litecoin hit it, and Cardano hit it. You see that? So if price was going down and I'm thinking it's going up, if you don't understand how the structure works, you could have definitely took a buy back up to this line right here. That price already hit. Remember, all 5 of them already hit this line already. But see, I know the structure, so I'm like, okay, well, I could hold for price to come here, but my alert was up here because I'm like, I believe price has to come all the way up here. But if you were scared and didn't really trust this right here, you definitely could have got out at this line and made money. Think about it. If you got in right here and you don't understand how the structure works, you would have been in drawdown, but you just have to hold it and know that it has to go higher because the other 5 went higher. But anyway, let me go back to where I was at out in the video. Listen. So remember, I was waiting for price to close below. I said, okay, I think price may come down here. And if it start wicking, I want to see that because that means that it wants to go higher. But if a candle closes below here, even though I have a heavy ass position on right here, 2 lots, I don't care because if a price closes below here, it's going to retrace up. So I'm either going to get in profit and break even, or I may make a little bit of money while it comes back up here to retest this breaker and then goes lower. Okay. So I just kept holding. I'm like, I'm just going to hold. And then I saw price take off. So what I did was I had like 8 or 9 positions on. So I just started unloading at these highs. I'm like, I'm not about to take any chances. I don't want to be in drawdown again before price goes higher. So when price got here, I took off 2 positions. I had on 7 left. I still hold on to my lot. So when price got here, I took off another 2 positions. I had 5 positions left. Okay. When price got above this 5-day body range, I took off 2 more positions. I got 3 positions left, including my 2 lots. To be honest with you, when price got here, I took off the 2 lots position. I feel bad because I could have held on to it and made a lot more money. But, I'm like, shit, it could come here in reverse. I don't know that. So I had on 2 positions right here. I took off another position here. I had 1 position left because remember I had on like 8 or 9 positions. And so what I did, I just let it run. I was like, you know what? I'm just going to ride what ICT called ride the lightning. It's something he called ride the lightning, which means that just ride the structure, meaning that just ride the candles until you see like a bearish candle close below. Just hold a position. So when I seen price gap up right here, I'm like, shit, we good to go. Now remember that 1 position I got on, I had that position on all the way back down here somewhere. I think I had it on like down here. So I sold everything as I came to these highs. I had like 9 positions on. Because remember, I was buying, this price was dropping. Remember, I kept buying, I kept putting in 0.110s. Okay, super small positions, not something that's going to over leverage the account. When price is dropping, you need to be putting on small positions, okay? Because ICT teaches this. Because when price reverses in a direction that you want, you're gonna instantly be in profit. It's like the best feeling ever to see those candles go from red to blue or from red to green, depending on what platform you're looking at. So I rode the lightning up here. I just held the position all the way until here, and then I got out. And that's why you see my. I should have held it for price to come up to this line, but I'm like, fuck it. I'm not about to experience no more drawdown. That's why you see right here it says late sale. It says late sale of all Litecoin. Didn't want to sit through retracements. That's another thing, and I'll let you guys go. Appreciate you watching. Listen, man, you want to make sure you using the call out button down here. You want to make sure you put all your thoughts on this chart. Even if you're scared as hell, put it. I am scared as hell. I am scared as hell that it won't make it down to the order block or whatever. You need to put all your thoughts on these charts, people. This is part of journaling, or you can have a journal itself. I like writing on a chart exactly what I'm thinking. Like, man, it's not gonna come down there, you know, feel like the world is crashing on me. Put your whole thoughts on here. It helps when you go back to see the moves play out or not play out in your favor, and it really helps you read and understand the structure and understand what ICT called narrative, which is actually more important than market structure. Narrative is more important than the market structure. Okay, so appreciate you guys watching. I'm about to go ahead and end the video. Hope you learned something. Thanks for watching.